Mm.
Okay. We are in April.
Was it April showers brings May flowers?
That's right.
Is that the,
And April hail brings insurance rises for everyone.
well, yes and no. I know we were texting last night. We don't have a topic, but it looks like it's about to kind of shitstorm outside my window right now. So I would love to talk about claims.
Yeah, but
Um,
before we start, it's April. Okay, so Masters. I've got my Masters April shirt on. Apparently, we've got all the April allergies as well from all the wind and rain. But the Stars just clinched for playoffs, so Rangers hat in the background. Rangers are off to a hot start. So April is like top notch sports season.
I thought hockey was over
Yeah, well, you would.
because they had that international thing.
That was the All Star break. So they did that for the All Star break instead of just contests and doing nothing like football does.
Still didn't watch a whole game, so they're not doing that great. Um,
The viewership was at an all time high, so you're the only one on that.
it's easy to go up from 100.
But anyway, yeah, I was going to ask you about hail because let's say one of our houses gets hit by hail. Yours is a good example. Like you just got a new roof. So dive in. Tell us about these potential storms coming.
I have two huge points I want to make to start off, and then we dive in a little bit more. If you get hit by a storm and your roof does not get ripped off, do not panic. If the roof is not there, then we panic. Second, do not let your roofer call your insurance company. Do not.
That's the number one thing that they're all going to say.
Yeah, we'll file the claim for you. No, do not. Do not. Would you let me call your doctor and tell him about your symptoms? No. Do not call. Do not have your roofer call your insurance carrier. One, I don't know about it. So when you have an issue with the claim, now you have a contractor who really doesn't give a shit as long as they get paid. They don't care about your satisfaction. I say that, but there are some good ones out there, but ultimately they're just trying to hit numbers. We've talked about this numerous times on this podcast or this recorded conversation that six people watch, that they're all about numbers. They come out like ants when it storms. There are some good companies out there. There's some reputable roofers. There's good work that gets done and some that understand it. But for me as a broker, and we talked about this one of our last conversations, I work for the homeowner. I don't work for the carrier. I don't work for the roofer. I work for the homeowner. So if anything happens, it is important that we are on the same page and we decide whether it's appropriate or not to file a claim. I'll use our friend as an example. When they bought their house up in Flower Mound, they got hit by hail like 3 months in, and he just casually mentioned they're going to file a claim, even though I'm his agent. I had to stop him. I was like, "No, you need to get at least two roofers out there, three if possible." He got three different responses and reports from three different roofers, ranging from it's totaled, it's going to be a $60,000 job, we can call right now, to, I mean, you've got some damage, but you're fine. So it's important to understand a hammer's always looking for a nail. If you get hit by hail and there's massive hail, yes, there is reason to be concerned, but hail doesn't necessarily mean it needs to be replaced, especially at this point in the year. We got hit by hail a month ago, the beginning of March. That's not even technically storm season. So what does it look like if you get your roof replaced in March after the first storm that's kind of out of season, and then come April and May, you get hit by hail again? Now, if there's a legitimate reason to get it replaced, then yes, the insurance company will likely cover that claim. But on the back end, you can't be upset that when come renewal time, September, October, November, they say, hey, we don't want you anymore. Because they'll do that. A lot of carriers have moved to if you filed more than one claim in a calendar year, they will just drop you. And they're completely within their right. And people are going to get mad. They're like, well, we paid our premium. It's like, yeah, well, you paid what they've already covered. So moving forward, they have no reason to cover you because you've become too risky. You've cost them too much money. You've paid premium for 2 years. Maybe it equals 10 grand that you've paid in, and they've paid out anywhere from 20 to $40,000 per claim. You're a net loss for them. Why would you keep that? I mean, that's simple math. So don't freak out. And as I'm talking, I can hear the rain falling on my roof, and I'm concerned about
Yeah.
hail. But
Yeah. Yeah.
you can file that claim, but it doesn't mean you have to get the work done. So I have a lot of roofs in my neighborhood that have tarps on them from that big windstorm we had at the beginning of March. And I don't know what their plan is or their method with their contractor that's going to do the roof repairs, but to me they're doing the right thing. They're making the necessary adjustments to make sure that there's no leaks, there's no extensive damage to the roof, and they're going to wait to make that repair till we get through this storm season. So don't panic. You have up to a year to file a claim, and then in many cases you have up to and I don't know the exact figure, anywhere from 6 months to 18 months to actually get the work done. So there's no reason to rush. If it's not leaking, it's still on the house, you are fine. You can get
Yeah.
it done. Don't panic.
That's a really interesting point because, yeah, what if you get hit again? What if something else comes up after the fact? Like, let it play out. Don't rush. Same basic principles as anything, whether it's life, sports, or whatever. It's like let the situation present itself, and then make your full decision with all the information.
Yeah, and a lot of people are worried that if they don't file it soon enough, it's not going to be covered. That the insurance company is going to look for a reason to not cover it, and I mean, that's true in a sense. So I have a client down in the Austin area. They sent me the report. That I mean, it looked like I mean, they got hammered by hail at some point. Um, Adjuster came out and declined the claim, denied it because he's saying that the hail damage was consistent to a storm that occurred prior to them being the coverage provider, even though they had been hit by hail multiple times between that date and now. So they panicked. Luckily, I followed up and asked them, and they explained that to me. And I said, "Oh, we'll request a reinspection. We'll just get another adjuster out there." And that was that simple. They got another adjuster out there. They're paying for the whole roof. So a no doesn't mean no. It means try again. Um,
Yeah.
and I talked to a roofer in a group that I'm in, and he said, when an adjuster says that to me when I'm on a roof, he goes, my response is, so you're telling me that a roof that has damage can't get hit by hail again? So they will look for a reason to not cover it. But if there's really a reason to cover it, you just got to keep trying. And so that's why don't let the roofer call the insurance company. Call me first, call your agent first. That way there's somebody else who's in your corner who needs this to be a good experience.
But there's something else about roofers too that comes up, whether it's legal, not legal, ethical, not ethical, or whatever. When it comes to deductibles and like who's paying deductibles, can you break down that?
So covering deductibles for a client is illegal.
So explain a way a roofer might pitch it, and then what used to happen all the time, and maybe why it changed.
So I can only speak to what I've like heard secondhand. I've never experienced it. I've never had a client tell me this is what happened. But from what
So a
I
lot of the,
understand,
a lot of the door knockers will say, "Hey, we'll get your deductible covered."
yeah. So what I've heard, and there's a large number of ways that I've heard it done. So the old day that I used to hear about, and like the old day, like 5, 6 years ago, is they would pay you like a marketing fee, be able to put their sign in the yard, and that would essentially equal your deductible, if not all of it, some of it. So they would just pay you after the fact. Another one was they would just bill the insurance higher. That's a little bit shadier. And then a third way that I've heard them eat deductible is they'll file a claim for the roof, and then they'll submit a damage report to like the gutters, the fencing, maybe the eaves around the window, and they'll get paid to repair that damage. And then you just don't repair that damage. You just keep that money. And that
Yeah.
essentially covers your deductible because you'll they're not waiving it, but you're getting a check for something that's you're not going to fix,
And
and you use that to pay your deductible.
is that legal? Is that gray area? What do you call that?
That one, I'm not 100% sure on that one. I would tread lightly with my term, but I'm going to say it anyway. I
Gray.
would err on the side of that's insurance fraud because they're paying you with the expectation you're going to make these repairs, and making those repairs is making you whole in their eyes in terms of risk.
Well,
Um,
think about on the car side though. In the old days, you get in an accident, the insurance cuts you a check, your car's good, you don't get your car fixed.
yeah, uh, the car's a little bit different. I'm not 100% sure how that's handled in terms of fraudulency, but it's one of those things where you can't if you eat some money, if you take some money and don't make repairs, let's say to the fence, let's say they wrote in some money to repair the fence because it's got tore up from hail and wind, and you don't repair it. Well, one, insurance companies are getting a little smarter, so they're not going to pay you the whole amount. They're going to pay you the actual cash value, and then once the repairs have been made, they have proof, they have certificates, they have invoices, everything. Then they'll pay you the remainder. So in some sense, that's a lot of money that you're still owed. So we got our roof replaced. The first check was like 8,900. We had to cover 2,100, which was our deductible, and then we were owed like another 3 or 4 grand on the back end to finish paying the contractor. So had we not gotten the work done and we just ate the money somehow, like we weren't going to get that additional check. Um, at which point the carrier was probably within their right to non-renew us or cancel us because we didn't make the repairs we said we made. So it's an agreement. If you're accepting money to make repairs, you need to make those repairs because then they're
Well,
within their right to not keep you as a client.
especially on a house too. I mean, we talked about deferred maintenance. You don't want that stuff to add up and something else to compound.
Absolutely, yeah,
That becomes a problem. So yeah, that makes sense, man. I mean, there's going to be a lot of people that are. We're in an interesting time right now. We're in April. It's tax protesting season, right? Get out there and protest your taxes, no matter what. Try to get a reduction. Reset the base of what they can raise on you, right?
hmm
So taxes, insurance, escrow, all the stuff we've been talking about for months now. Big season for it. So people have questions, definitely reach out to us and do not ignore things like you're saying, because it's when it piles up. I mean, people who, oh, I just didn't do my homestead. Well, your taxes are $3,000 a year more now.
yeah,
Oh, I just didn't renew my home insurance. I didn't shop. I didn't have time. Well, that's 2,000. Now you're $5,000 a year more on your housing payment, and the escrow is essentially collecting 10,000 because they got to replace the five and get ready for another five going forward. And so, you're losing money out of your pocket that could be sitting there for day to day use. Maybe it goes to the escrow account and it sits there for down the road, but not really. It's not coming back to you. So, staying in front of all these things is really important, especially if something goes sideways like a storm or whatever.
yeah. I mean, it's a roundabout way to get to it, but we talk a lot about putting yourself in a good position and handling a claim, handling your taxes, handling your escrow is a part of that whole picture.
And the escrow is I'm learning more and more that that's a hill I'm willing to die on. Whether or not escrow is truly a good thing, I don't think it is anymore. I think that they're changing it in so many ways. But there's a lot of stuff with the mortgage industry that hasn't changed with the times, and that's a real thing. And my point of the day, I'll get into in a minute, but you have to stay on top of it, and most, like, if you have an FHA loan, a VA loan, you have a government guaranteed loan, you have to have an escrow account, and their escrow account rules are really firm. So you just got to really understand the rules and make sure you do your best so that like I changed my insurance. Well, my escrow, they were about to do an analysis and they're like, we don't have evidence of that. I'm like, well, here you go, so knock it off. And like, so sometimes you have to take one or two extra steps if you do things and let the mortgage servicer know. And remember, servicer and the actual lender are different. And so there's just so many steps to the process, and it's really important you stay ahead of it.
Yeah, absolutely. I don't know what your point is going to be for this conversation, but I do want to get your take on something.
Bring
Because
it.
it's a,
Then we'll,
and
we'll wrap it up and make it a short one today.
I know there's two versions of it, so I don't know which one is a part of this transaction. But Rocket bought Mr. Cooper.
Yeah.
So what is that? What is your take on that? What does that even mean?
Well, Rocketbot, they're merging with Redfin and Mr. Cooper, so two very, very large companies. Mr. Cooper is one of the largest mortgage servicers in the country, and then Redfin obviously is a tech giant. So Rocket is trying to grow to be number one by acquiring, not necessarily by internal growth, but by adding systems and pillars and whatever else, right? So to be determined. I don't know if it's good or bad. I've put a couple posts out there, see if I can get some people to comment and see what their thoughts are. But Rocket's going to say that they're doing this to add more tech, more cutting edge, industry leading stuff. And good Lord, my phone is going crazy. Um, and so that's what they're going to say, right? Is like, we're doing this to help our customers, to provide more resources, to provide more options, technology, possibilities in general. Come to Rocket companies, and we got you all the way through. Well, on the flip side, if I'm play devil's advocate, well, if you've got me from all the way through, you could have me bent over for the whole time too.
Mm-hmm.
And so you could be charging more, you could be dominating the space. Think about monopolies and antitrust. If you have all the information, they could be getting ahead of something else too that I'm really interested in, and I'm going to bring up next week. And that's my point, is that I'm going to Washington, D.C. So I'm going to Washington, D.C. for mortgage advocacy with a group there. And I'm really excited about it. They're going to have a bunch of big dogs in the room talking to us about all the changes going on with the FHFA, Consumer Financial Protection Bureau, CFPB. It's going through the courts right now, whether they're getting rid of it, whether that needs to stay, who are they, what do they do, if there are things that can be changed instead of just getting rid of them. And that goes for all these other agencies. But the big thing that we're going to DC to fight about is credit trigger leads.
Mm-hmm.
So right now, the credit bureaus, there's three credit bureaus: TransUnion, Equifax, Experian. They effectively take your information without your permission and sell it to other people, other mortgage companies, when you get your credit pulled. So the system says that you have to have your credit pulled to be able to get a mortgage, and you have to pull it with these three bureaus for us to be able to consider it. And then those three bureaus that basically have a monopoly on the credit system take your information and sell it behind your back without asking you. And if there's one of the things I'll get clarity on, if they have asked you, it's a one-liner, 100 pages into the deal. Same thing when you accept cookies. What is it that I'm accepting here? Oh my gosh, I just sold my information to a foreign entity. So I'm going to get a lot of clarification on all that kind of stuff. But in my head, Rocket Mortgage is absolutely one of the biggest purchasers of those credit triggers. So their call centers and everything, I guarantee you, if anybody's had their credit pulled that might be listening to this, April 2025. So in the last year or so, if you've gotten your credit pulled, I bet Rocket Mortgage was one of the first people that called your phone. And so if credit triggers are banned, there's a couple different things that they're talking about leaving in place as like a compromise for the credit bureaus, because they're so big. They have lobbyists that, they have so much money in the system. And I'm going to learn a little bit about that too. I'm really excited because watching the swamp work is going to be pretty fun for me, because I've always liked politics and how the system goes, right? All the way back to I'm Just a Bill, a cartoon. And so there's a lot of things at play, but when I saw that they bought Mr. Cooper, I was interested because one of the provisions that they might kind of curb, give into for the credit triggers is that current servicers of the mortgage can still call the credit trigger. So like me, you, Rocket, and servicer A, all have been buying trigger leads. Well, if the bill gets banned, then that's 4 or 5 people that was paying the bureau. Now it can only get to the servicer, so one. So they cut their, 1 out of 5, 4 out of 5 companies are now not giving revenue back to the credit bureaus. That's a bad thing for them. They make money on that. So if Rocket is one of the biggest purchasers, this is some ifs, I'm assuming things here. Let's just say that they're one of the biggest purchasers of credit trigger leads. Well, if they just merged with the largest servicer in the nation, who basically handles 1 out of every 6 mortgages in the United States, they effectively get to keep credit trigger leads because they just bought the exclusion.
Bought it, yeah. They bought the right to play still.
So I'm interested if that, I mean, I guarantee there's a lot more to it at play. You make money on servicing. There's a lot of crossover. It's a lot more employees. Well, you boost your business in a lot of different ways. You bring on a huge portfolio of potential clients to try to refi here. So there, and Mr. Cooper does a lot of loans. They do high volumes. So there is money and margins with Mr. Cooper as it is if you take the servicing credit lead thingy out. But that is something that kind of hangs out there way down the list that I'm kind of interested in. So
Yeah.
I don't know what their goal is to be number one. UWM has been number one in the wholesale space. Rocket wants to be number one in basically all spaces, retail and wholesale. And so they're doing what they can to grow. And the name of the game in business is scale, grow. So that's what they're doing. They're growing by getting other businesses. And hey, we don't have this. Well, let's just go get it. So that's what they're
Yeah.
going to tell you they did is they're looking for solutions. I'm just wondering if how big is too big. I don't know that answer.
Well, I have a question about when loans get acquired. And I'll try to keep it simple, so feel free to be simple back. And you may not know the answer, so I'm going to use a comparison here. So when a mortgage gets bought, are they are they simply just transferring that loan and that debt, or is the new servicer kind of paying it? Because in my knowledge of debt collection is if something gets sent to collections, that debt's already been paid. And so that collection agency is calling to try to get 100% of what they paid for that debt, if not more. Is that similar to how a mortgage is bought, or is it a little bit cleaner?
It's yeah, no, nothing's clean. It's going to be similar to that, but I've had it explained to me a few times now that I'm kind of moving into the ownership space of mortgage companies, right? So we don't do servicing. We're on the broker side. So that's one thing that
Hmm.
makes it different than some of these other places. We don't have servicing, so some of our offerings might be a little bit different. Maybe we can do more things than they can because they want to, have cleaner paper for servicing, reduce their risk and whatever else. So like they'll tell you they might not make any money on a loan. They'll go way down on interest or they won't charge any fees, but they'll do it because they're going to make money back on the servicing side. So it's a really complicated topic, but it's basically 2 different sides of the business and 2 different ways to make money on a loan. So you'll hear it as a secondary market. They're trading and being sold, bought and sold, and they're packaged up and whatever. And then as they're sold, it just goes to a new servicer.
Gotcha.
So
Okay.
like Mr.
Because
Cooper will buy all the loans from Rocket or UWM or whoever, doesn't matter to them. They could buy loans from Chase. Like it doesn't really matter where it comes from. They'll buy the loans and then they'll service them in their portfolio. They'll be the ones that are collecting payments every month, running the escrows and all that kind of stuff.
yeah, because I mean I know it's different, but like basic debt collection. If I owe X company $1,000, I go delinquent on it, they send it to collections. That collections agency is paid not $1,000. They'll buy it for, 40 cents on the dollar, and then they'll try to collect $1,000 to make that extra 60 cents. So when you get called by a debt collector, you can say, well, the debt's already been paid. Like, I'm not going to pay the full amount. Like there's a negotiation involved
Well,
in that. So I was
but
curious if
then
mortgages, if
they
there's a
on that
loophole in there
on
for
that point
consumers.
though, if you do that and you don't pay it, then they're gonna keep it on collection on your credit. You're never gonna be able to qualify for
Right.
any financing ever again because your score is gonna be so low.
Right. But it is negotiable, right?
It is
Like
negotiable. They will
they're gonna
settle.
take any kind of money they can get as long as
Right?
they get
And
what
that's what
they
I tell
paid.
people with collections on the report. I tell them, call them, ask them what you can do, what you can work out, get it off of your report.
Yeah. So I'm wondering if I'm sure there's not, but if there's some sort of super crazy backdoor loophole when your mortgage gets bought for you to be like, hey,
No,
yeah, that's the dumb
no,
question I was trying to get to.
no. You agreed to a 30-year mortgage, man. Pay your mortgage.
Yeah. And you might have a different feeling on this. I think we're kind of in line. I think the client not having, or the homeowner not having a say on where their loan goes and who services and buys it, I think is a little shady
Not
to an
really.
extent.
It's not shady. It's just how the world works. I mean, like you buy into BlackRock, but you don't have any say on how they run their business on the stock market. You buy their shit. So they run their business the way they run their business.
True, but like you don't buy a Samsung TV and then 90 days later they're like, hey, by the way, it's a Sony.
Uh,
We're gonna come switch the nameplate out.
but it's different. You're dealing with things that are floating around in space. It's one of my things I like to say all the time is how money is fake. Like, what's it tied to? What's the real thing? Oh, not gold? Okay, well, it's just an idea, and you've agreed to that idea. So by agreeing to that idea, then you have to agree to all the other things that go into that idea.
Yeah. I think we're aligned in a lot of things. You could just know a little bit more on that side, obviously.
The
But
servicing is a wild place that I have not spent a lot of time in.
I know, but just the way money's made and how as a homeowner myself, how my liability is just passed around like it's nothing.
It's not nothing. It's literal currency. Someone else is buying it because it's valuable.
Yeah. But as things move, value should change, right? Like my dollar that I spend at the store gets
Not to
taxed four
you,
times.
not to you, and you're lucky that it doesn't change because what if someone else says, "Nah, it's not that great. We need Greg's interest rate to be 8% instead of 6%, so that we will buy it. Otherwise, Greg's going to owe the whole thing right now." That's your argument.
Technically, they can call the loan due at any point in time, can't they?
If certain things aren't matched.
Yeah.
You have a contract in place. It's like locking an interest rate. You locked it in to protect against it getting worse. So you're protected. You have an agreement. You've accepted your agreement. Whatever they do on the back end is different.
But the agreement is with
It's not
who
changing.
was on the other end, right?
The agreement is still with you. You have to pay the mortgage.
Right. But if I go through UWM, my agreement is with UWM.
Um,
Contracts work both ways. I'm
Not
getting into the weeds.
necessarily
I'm
because
just trying to
on
pick it
that
apart.
in
I don't
those
necessarily
closing
think this way.
no, yeah, this is a terrible line of questioning. So the on the closing docs, it says that they have the right to sell your loan at any time. You've
See,
agreed to it.
I did not know that. And I
You
would
read
be,
the closing docs.
well, first of
All
all,
700 pages on them.
I sat there and watched my wife sign the closing docs, and it was literally this thick of paper. And when I asked,
Well,
what is
so
she signing? It was, oh, a lot of these are redundant. They're like copies of copies of copies.
not every title agent and escrow agent is created equal.
Right.
Some do a really great job of giving you a quick synopsis of what each page says before they let you sign it. Others say, "Oh, ask your lender." And like, well, they're not here or
Yeah.
whatever. So that is unfortunate that not everyone is great at their job, but is that's the world, baby.
Yeah, I mean, it goes for both of our industries, right? I mean, so
Yeah, same as the roofer explaining something funny. If someone else does the same thing, maybe even the lender that someone closed with didn't give great explanations, and then they call them later and says, "Why did my mortgage change?" And then they don't even answer the call. So you just know that in the documents it says that they can transfer servicing rights, they can sell them. That's the secondary market. If that wasn't happening, then your mortgage would be way more expensive.
do you know, and this could be just a total hypothetical question and answer. If somebody hears that when they're signing documents and then says, no, I don't agree to that, is do we just like, does the loan process stop?
Yes.
and then you just have to go to the drawing board, which there's probably no loan agreement that doesn't state that.
Correct.
It's interesting.
So then that means you don't want to be a homeowner.
Kind of a weird corner people into the.
It's not courting you in anything. Literally, that secondary market is the competition that's keeping you able to have a mortgage. Otherwise, you have to pay cash.
Yeah, I guess. I don't know.
Yeah, you're arguing how does the market work? Well, the market works the way it works, and it exists so that you can have a 30-year note. Nowhere else in the world has 30-year mortgages. The United States is like the only place.
Well, I'm asking as a consumer. I'm willing to bet that 95% of the people that you give loans to or help buy a home don't know any of this, don't
Well,
understand. They just think,
most of them know the word "my loan was sold."
well, yeah, I
Like,
mean, everybody knows that because you get the letter.
but they've heard of that. People don't like it. You have to switch how you make your payments or whatever. But it's literally the secondary market exists so that people basically guarantee your mortgage stays in place, so that it doesn't be called due, so that your interest rates don't skyrocket, so that your terms that you agree to don't change.
So next time, how about you get your little power pointer and your pointer wand and you explain that? Because that's
Uh,
something that
I don't.
nobody understands.
Correct. That's why I'm not going to do it.
Or what we can do is we can have a movie day. We'll watch
Well, yeah,
we'll watch The Big Short together and
yeah.
we'll live stream it
Yeah, we
on
should.
YouTube.
We'll get into our analytics and see who our 6 viewers are. We'll send them a VIP invite. We'll do a big short watching
Yeah,
party
we'll
on
do a pillow
one of
fort
the
in the living room.
hotel roof decks. We'll make a thing of it.
I mean that movie does
That
touch
movie
on
is
surface
incredible.
level.
That
Yeah,
movie is
surface level stuff.
incredible. But the stuff that those characters in real life understood, the reason they asked the questions and the reason they do what they were doing is, really tough. Like, people go to really expensive business schools for years and years and come out of there not understanding.
Well, something I've learned is
And that's
that
why
side of the
I'm not
yeah.
capable of being the one to have a PowerPoint to tell you about the secondary market.
Well,
That
and
is that is beyond that becomes a different piece of the financial market. So I do mortgages. Well, that's not mortgages. That's securities trading and all that, bonds and whatever else.
yeah, I don't get
That's
any of
Wall
that.
Street shit. I'm not on Wall Street.
Yeah, I don't get it. So it's a great
Well,
movie.
it
Spoiler
is.
alert: the housing market crashed. So if you haven't seen it, sorry, I ruined
Yeah,
it.
yeah. But
But
just know that it's all in legislation, regulations, government kind of stuff. So the further you get into the business, the more you understand. But just because I understand a decent portion of it doesn't mean I can sit there and spit it out and teach it to somebody. It's like, yeah, I hit ball good, but I don't know how to tell you to hit ball good.
you don't hit ball good.
I catch ball.
But no, I
Um,
mean, even just like a glimpse into what you think your understanding of it is helps people. Is
yeah,
that
well,
simple?
the,
With
the
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 caveat of,
understanding
hey, I
is
don't know what I'm talking about, though.
without the ability to sell the mortgage company won't do the mortgage they gave you.
Right. I mean, it's plain and simple. But the question always secondarily is why,
Is
and
what?
is why. Like,
Oh,
why is it like that? But you may not have that answer. Is what we're getting to, and
oh,
it's above us.
that's the
It's above
Joe
us.
the Joe Dirt thing, right? I don't know why. Why are boobs good?
Yeah. Why is Sky good?
Why is Sky good?
Why is Positrack? What is it? Why does Positrack work on a '97 Plymouth or something like that?
It
It
just
just
does.
does. Yeah. Um,
Yeah.
on the Big Short note, Margin Call. If you haven't watched that, that's a great
Oh,
movie.
I can't remember if I have or not. I have heard of that one though.
It's a spacey
But
movie.
anyway, the let's wrap this up. But it's gonna be really interesting for me next week. I'll be in DC for about 3.5 days. I'll be on Capitol Hill. I'll be listening to people like you've heard the word FICO. Well, the guy that is like the CEO of FICO, those types of people are going to be talking to us. There's another thing called Vantage scores. I'm going to learn about what's coming in the mortgage industry. Is FICO and the three bureaus, are those the only way to do credit scores for mortgages? Is that changing? Are we going to try to bring in some competition? Because cost of credit reports have like doubled and tripled over the last couple of years. This credit triggered lead stuff, is that going to affect the cost of credit reports? It used to be $20, now it's over 100. Is it going to get over 200? Is there an end in sight? So credit is a really fun topic right now with a lot of implications, the bureaus and everything else. But then you've got all the different regulations going on with the current Trump administration, and how is that going to play out? What does that mean? Is it good? Is it bad? Are there unintended consequences? Are the actions that they're taking, where they go, and is that a good thing? Like, they're going to break down all of that from a super, like, everyone tells me when you go to DC, you're going to really learn that people actually aren't that political. They just take a one side stance to be a character on TV.
Oh, absolutely.
And so I'm going to be in the middle of it. And I'm really excited for it. I've only been to DC once when I was younger, like junior high, and we were there for like sports. So we didn't really do anything. So I'm going to try to go on my little tourist tour and do pictures of the monuments and all that too, if I get
I'm,
any time.
I went when I was 3 and I was on a warship.
Heck yeah.
Uncle was in the Navy.
Yeah. Who knows what kind of people I'm going to meet too. I mean, I might not get to see any of this stuff because we're talking about who actually killed JFK. I have no idea.
I'm excited to see how much swag you get, because I feel like there's definitely going to be some vendors and recruiters who are like, "Here's a pen."
Oh, no, I try not to take that stuff unless it says like Capitol Hill or the actual Congress something or other. I don't think I'll accept any junk. I gotta fly back. I don't want a bunch of shit on my luggage.
Yeah. Well, we'll expect a full report and photos. We'll that'll be your PowerPoint. We'll just see your photos. Um,
Yeah, there you go. I can do that one.
yeah, just snap a
But
bunch of pictures.
and it's also an interesting time too. Everyone's going through those JFK docs, so I'm not sure what I'm gonna learn while I'm out there.
Probably nothing. It's the government. Anyway, we'll we'll talk next week. We'll get this one up this week. When are you gonna be gone?
It's like Tuesday through Thursday or something like that.
Are you here for the golf tournament?
I'll leave right after that.
Okay, that's
Like
important.
10 days.
Well, we're gonna shoot a 52. We'll report back. We'll show the scorecard. Talk to you guys later.
Yep. See it.